Okay, great. We are going to go ahead and get started. Thank you all very much for tuning in to today's Fit for Learning webinar series. As you can see, we're going to be talking about credit scores, and some of the different ways that you'll be able to help to kind of improve those scores or even repair credit if you've had some things that have come up with your credit report, and we're going to kind of walk through all of those different pieces today. My name is Kyle Bingham. I'm the Managing Director for Financial Fitness for Life. Also joining me today is Josh Zepp. He's one of our financial consultants. And here's a look at today's agenda, or more specifically, what it is that we're going to look at. So we're going to start by just talking a little bit more about credit scores, and credit reporting. We're going to go into kind of how it works. We're going to talk about what is going to have the most significant impact on your credit score itself. And then we'll talk a little bit about some of the common mistakes that we see that are having potentially a negative impact on a person's score. And then for the second half of the presentation today, we're going to look at some tips that each of you can apply to try to improve your credit score. And that's where we're going to look at how often should you be checking your score. We're going to talk about different strategies that you can use in an effort to maybe remove some negative items from your report. And then lastly, we're going to also talk about people that maybe don't have any credit, or you're just starting to build credit. We're going to give you some tips there as well. And with that, what I'm going to do is turn the time over to Josh, and we're going to walk through a couple of questions about understanding your credit score. And so Josh, walk us through this first question. What exactly is a credit score, and how does it work?
Yeah, no, thanks, Kyle. I appreciate you having me on here. And, when it comes to your credit score, I think this affects everybody just a little bit differently. So it's really important to identify what situation you're in. And when it comes to a credit score, a good way to think about it, at least this is kind of how I think about it, is how good are you at borrowing things, especially money in this aspect here. So credit score is made up of your credit history, making sure you're paying things on time. We want to make sure we want to minimize late payments as much as possible. Credit mix, those are all variations of things that affect and create our credit score, essentially. One thing I thought was pretty interesting, doing some research actually yesterday about this, I was just curious to see how the average American has done with their credit, or I guess what's the average credit score in America. Back in 2012, it was 689, which is considered a good or average score. Going into 2022, so last year, the average credit score was actually 719. So we can see about 20 plus points on average has increased over the last 12 years. So that's really good to see overall. And when it comes to your credit score, I think one thing that's also important is, why do we need a high credit score? Most of you probably know, I want to have a high score so I can get a lower interest rate on a loan or a mortgage or something like that. That's one of the most important things, of course. There actually are a couple others when it comes to the insurance space and the healthcare space. If you're getting a life insurance policy, for example, they're going to run your credit and see how you are at maintaining payments, making sure you're consistent on making payments, and this can affect how your premiums are. Another thing is the healthcare industry. A good example is if you're trying to go to an assisted living home or trying to help someone go into some kind of home like that, again, they're going to run your credit and see how you are in maintaining credit as well as making payments on time. So again, there's a couple things other than interest rates that is affected by your credit score.
Excellent. Thank you, Josh. Now let's move into talking a little bit more about what impacts your score. And I know you've alluded to this a little bit, and we're going to be talking about the FICO score in particular right now, but what are those factors that have the most significant impact on your FICO score?
Yeah, absolutely. And, it's really important here, especially at the top, you see the range there of the FICO credit score from 300 to 850, and kind of wherever you look at your credit out of the credit bureaus, it might vary a little bit, 5 to 10 points here or there with some considerations. So just important to know that going in, if you're going to look at your credit, maybe once a year, it can fluctuate just because of the credit bureau itself. You can see here there's 5 factors that really maintain and have a good understanding of what makes up your credit score. The first one, you can see it's the most heavily weighted is the payment history. So we want to make sure we try and eliminate as many late payments as we can, even if it's the minimum payment. That's a really important aspect to it, and that's a big emphasis we have on our debt management or debt reducing strategies we have, is at least make the minimum payments. It'll just help you out quite a bit in the long run. Number 2 there, we have amounts owed. So a good example is just looking at your credit card and your credit card maximum amount. Of course, we don't want to try and get to that amount. We want to try and have a portion of it we use. Of course, we use a credit card maybe for an emergencies or some kind of expenses, but if we're able to portion it to only using about 30% of our maximum, that's something that we all will consider to be a good thing. Number 3, length of credit. So usually as you get older, your credit score can increase over time because of the length of credit. One thing that's really important, and I think Kyle will mention it near the end, is for those who maybe have children going into college or mid-20s, it might be a good idea just to at least help them set up a credit card just so they can start having that length of credit history at an early age. That way, when they try and get a loan or a mortgage, car loan, whatever it may be, they have some strength in their credit already. 4, new credit. That's something where, of course, we need to apply for credit in order to receive, an interest rate or how it'll affect our score. So it's really important that we don't try and get 4 or 5 credit cards at a time kind of thing. So just make sure you're aware of when you've applied for credit and make sure you're not doing it on a often basis, I guess. And then 5th is credit mix. Credit mix meaning which different variations of credit do you have? Mortgage, student loans, car loan, credit cards. A lot of people think of that as a negative thing to have different variations of credit. It's actually the opposite. If you have a healthy balance or a healthy mix of credit, it could bode well for you down the road. So it's one thing just to make sure is you understand what your credit mix is.
Excellent. Thanks, Josh. I think another way, I'll just quickly jump in for just a second. When people are asking us, for an example, what should I be focusing on? Seeing kind of this range and these impacts can kind of help to prioritize those things. Just like Josh said, that obviously payment history, we don't really want to ever have a missed payment. We want to continue to at least make those minimums. And then obviously managing your credit utilization rate. Those are the 2 big pieces that are going to have, typically the largest impact on the score itself. So now, Josh, let's talk through this question. What are some of the common mistakes that you see with people that they're making that are lowering those scores?
Yeah, absolutely. And, we have five here, but I'm actually going to try and kind of clump these together here. Meaning the first one and the 4th one there, you see late payments and ignoring past dues. I kind of put those in the same category. And as we just previously mentioned, 35% is on payment history. So we want to make sure we minimize late payments. We want to make sure we're at least making the minimum payments, if not more, just to pay that off. 2 and 3, again, I kind of clump those together, maxing out credit cards and maintaining high balances. We want to try and push to that 30% portion range rather than the 100% or maxing out, a credit card or something like that. And then if you do have high balances, we want to try and knock those down over time. So if you are able to put in, additional amount of money toward those high balances to pay them off faster, try and do that any way you can. And then you see 5th year, applying for multiple credit accounts simultaneously. I mentioned that before. of applying for new credit. We really don't encourage people to, try and apply for 4 or 5 credit cards at the same time. And one other thing that actually isn't on here, which I thought would be really interesting to bring up, is kind of the length of history. And what some people do, especially those who have credit cards for maybe 20, 25 years, maybe they got back in the 90s or early 2000s, is they finally pay that off and they get rid of that line of credit. And that can affect your credit history. So for those who do have those long lengths of credit, it might be a good idea to keep those, not use them as much, but having that just so you have that length of history or credit history for yourself.
Yeah, that's a great point, Josh. So now we're going to shift gears a little bit here. So I know that for some of you, kind of what we've gone through, this is a little bit of review. And now what we want to start to talk more about are actual tips that you can start to implement that are going to be able to help you to either get that credit score up higher, to help to be able to repair that if it's low, or really just to be able to maintain that score that you already have. So the first question that I want to kind of walk you through, and I will say too here, after I go through a couple of these questions, we're going to have a recap of everything that we talk about as we're kind of walking through these. So how often should you be checking your credit score? Generally speaking, you typically want to try to do that at least once per year. And it's not just a matter of checking your credit score, it's really getting your credit report and then being able to walk through the different credit lines that you have, the balances that you're carrying, looking at utilization rates that you have, looking at any inquiries that you had made. And that is really what is meant by kind of going through and checking your score, right? Annualcreditscore.com is a great place to be able to do that. You get one free report each year, and it comes from all 3 of the bureaus. And so I'll put that up at the end of the presentation too, but that's a real easy place to start. There's nothing you have to pay for, and you'll be able to kind of check the box on that. Now, in addition to that, people oftentimes are concerned, well, if I'm checking my score or looking at that report too often, is it going to lower it? Well, when you're pulling your own credit, essentially, that's what's considered a soft pull or a soft inquiry, and that isn't going to have an impact on your score. What we need to be mindful of, and Josh already alluded to it a little bit, is that we need to be careful about what we call a hard inquiry or a hard pull, and that's where a lender or a creditor is actually going in and pulling your report. Okay. Now, when those pulls are happening, it may temporarily bring your score down just a little bit. But what you really need to be mindful of is if you have a lot of hard inquiries in a really short period of time. Let's say you have 2 that happen today, 1 tomorrow, and then 1 next week. That could be a red flag for a lender, primarily because they're going to look at that and they're going to see, wow, this person is applying for a lot of credit lines right now, or loans, whatever the case might be. That could also lead them to think, well, they maybe didn't get approved by this other lender, so they had to go to this lender and that lender. So that's really something to be mindful of as well when you're going through this process. And if you are having your credit pulled, again, it's not going to be necessarily this huge hit to your credit, but there are other situations that it could impact as well, just like your ability to actually get that credit. Now, going along those same lines, talking about strategies, what can we do to improve our credit if we've got some negative items on there? Well, again, it starts by at least reviewing that report each year, because there's times where I've spoken with people that they have no clue that there was a derogatory item on there, or that maybe there's an actual collection. I mean, you see it a lot where there's these small bills, like a doctor bill of say $50 or something like that, that just kind of floated under the radar, and now all of a sudden it's showing up, under a collection. So getting that report is the best thing, to just be aware of anything that might be happening. Now, one of the easiest things that you can do is you can check your report for any of those derogatory items or any inaccuracies. You actually can go to the credit bureaus and request that they fix that. Okay. Now, that can be a tedious process. It really kind of depends upon what that is that you're trying to fix. But I think really the first step is just to try to resolve that issue on your own. You're going to be able to call them up. You can submit the request online. So you can do it by mail. So there's a number of different ways that you can do that. So you can use that as probably the easiest starting point. Now, we also get questions about credit repair companies. Does it make sense to use one of those companies? Is it worth it? And I would just say that there are certain situations, and depending upon how much you're trying to fix or repair, where a credit repair company could be beneficial. I would just say to really do your due diligence on it, because there are credit repair companies out there that, for lack of better terms, they 100% are a scam. So if you seek out a good company, one that you're able to check the validity of that company, then by all means, I mean, that could potentially help you. But just remember that credit repair company, they're not going to be able to go in and fix the inaccuracy, right? It still needs to be the credit bureau that's going in and fixing that. Now, the third point, and I think this is something that can be applied if you're repairing credit or if you have no credit, but what should you be doing? One thing that you can do is you can get a secured credit card. And basically what that is, it's a credit card where you put down collateral. So let's say you put down a deposit of $500. A lot of times that $500 represents your credit line, but because you put that money up front and essentially collateralized it, you're essentially lower risk. And that's going to allow yourself to start to build up some of that credit history. Okay. Another thing that you can do is you can be added as an authorized signer. So maybe you have a family member or a friend that has impeccable credit, and you could approach them about possibly being added onto one of those accounts or one of those credit lines as that authorized user. Now, you're probably thinking, well, that could be a double-edged sword, and the answer is yes, that you need to make sure that that person that is that authorized signer or user is, handling that specific situation and that credit line appropriately, right? And so the last way that you can do is also have a co-signer. Again, it's the same kind of thing, because now the co-signer and you are both liable in the event that the loan defaulted or that the credit card went into default. But that can also be another really helpful way to be able to start to build that credit history or also to rebuild it. Okay, as I promised, I wanted to walk you through and have you kind of take away some action steps from today. So first thing is, make sure that you're reviewing your report at least once a year. And we do a number of surveys here at Financial Fitness for Life. And what we find is that the majority of people are checking their scores. I would just take it one step further and say, make sure that you're really looking at that report, that you understand it, and that you understand what's impacting your score. And again, annualcreditreport.com, that's a great place that you can go to get that. As you're identifying any errors or any inaccuracies, you want to develop a plan for how you're going to start to kind of dispute those. You can contact the credit bureaus, and as we talked about, you can go online and submit this request by phone or by mail. Josh talked about it earlier, that really the action step that's always going to be most important is just continuing to pay your bills on time. And even if your income might be slightly disrupted, still try to make those minimum payments, because even one late payment more than likely will have a negative impact on your score. And when you look at your FICO score in particular, just one late payment could be anywhere from a decrease of 60 points to over 100 points. So that can drop you into a lower tier pretty quickly if you start to rack up those payments. And again, another good reminder to credit utilization rate. If you keep it below 30, that's going to put you kind of up in a higher tier in terms of the amount of credit that you're using. Depending upon who you talk to, really, if you can get down into those single digits, so really under 10%, that's where you're really going to start to see your score start to go up, because it's a clear indication that you're definitely not monitoring, but you're utilizing the credit that you have effectively, meaning You may use that credit line, but then you're paying that off every month as you go. And then I think another really important point is figure out a monitoring system that works for you. A lot of you probably have seen on your bank accounts or your credit unions that you're working with, there are a lot of options that are out there. Some are just going to give you the score itself, but there's a lot of other tools and resources that go far beyond that. And here's a couple of them to maybe have you check out. Again, annualcreditreport.com, that's a great place to go to get that report. Credit Karma and Credit Sesame are both applications, apps on your phones that is going to do a lot more than just give you your score. They're going to be able to provide an analysis of how you're using that credit. They're going to be able to give you tips on how to improve that credit. So they're going to look at those different variables that Josh talked about and help you as you kind of strategize to move forward with that. And another really cool aspect about these apps too is that it can connect you to other resources, outside of just your credit score and helping to continue to monitor and manage your credit. Some of these apps and services, they're going to be initially free, and then others are going to be paid services. Again, just kind of figure out what it is that you're looking for, because it's not to say a paid service is bad, it's just more a matter of like, what is it that you're looking for? I wanted to also bring up Experian. There's a component to the Experian app called Boost. And what Boost is, it allows you to actually go in and put your telecom bills. So when you're doing your internet, your cable, phone bill, you can put those in through this app, and it's going to help you to establish essentially kind of another history of making payments, if you will. So if you're somebody that is just starting out, we talked about people that don't have a lot of credit history yet. Experian Boost is one of those where as long as you're paying your bills on time, those telecom bills, check out Experian Boost as a way to get you to establish a payment history a little bit faster. And then again, the three main bureaus, Equifax, Experian, and TransUnion, these also have a ton of resources that are available and apps that you can use. And with that, what I want to encourage all of you is to take the time to go back in and really look at your score, try to understand what's going on in your situation, but feel free to reach out to us, or you can scan this QR code right here and set up an opportunity to talk to one of our consultants. This is complimentary. We're just here to help to kind of guide you through any questions that you have. And if there's challenges that you have, or even other topics for that matter that you'd like to talk about in addition to credit repair or just credit monitoring, feel free to do that. And also, Josh just sent out the link in the GoToWebinar console, so you can click on that link as well, and then you can have access to our team's calendar. And then lastly, be sure to register for next month's Fit for Learning webinar. This is going to be insurance basics. We survey all of our attendees throughout the year. Insurance is one of the most highly requested topics. And so if you haven't registered already, be sure to do so, because we're going to have a great webinar next month in August. And with that, folks, I just want to thank you all for jumping on and spending a little bit of time with us here today. You have us all here as a resource, so if there's anything else that we can help you with, or if you'd like to have a follow-up conversation about your credit report and credit scoring, don't hesitate to reach out, and have a wonderful rest of your day. Bye-bye.